Hi guys, it's Mark with Binary Options Bootcamp. Today is Monday, April 3rd, 2017. Just wanted to do a quick market recap. Seemed like we had a few of our members having some difficulty with some of the market movement today. So I just wanted to outline some of the opportunities that presented themselves today and go over those kind of step by step. So let's take a look at the market. Of course, we're talking in regards to the Wall Street 30 or the Dow E-mini futures contract. So let's talk about the open. Okay, so these two candles here represent the open. Let me just erase that. I'll use my highlighter. So those two candles represents the first 30 minutes of the open. And you can tell, these aren't really telling the story, but we had a nice push up after a little a down move. So it was choppy. It was all over the place. So it didn't really present any great opportunities to trade. So that's why when I in the chat this morning, I outlined a couple of the scenarios, what to look for. One of which was, a breaking outside of value area and then possibly bouncing off of value area low and with a continuation move to the downside. So that is exactly what happened today. So obviously, it has three ways to go, up, down, or sideways. So it chose down today. So let me talk a little bit about some of the plays here. And I'm going to drop it down to the 5-minute time frame so we can kind of see a little more granularity. There we go. So we're over here. So let me get my trusty highlighter or my laser pointer. All right, so here we are, 9:30. So if we follow this grid line here, so this is the open. So you see we had a quick move to the upside, bounced off of the Monday POC. So that's a point of control. That was where the most volume occurred yesterday. So obviously, really strong level. We got a little scalper alert. Got a little down arrow. Now, all the other indicators weren't really showing anything that would have given me any confidence to make a move here. My confidence level would have grown as this exited value area. So what you're looking for, and we got it here, okay, we got this big spike down, okay, and then it shot back up. This was roughly, about 10:15, and then it came back up, tested set or settlement, which is at 20,604, and then did a continuation move to the downside. Now, really, as it exits value area, that should be a play in itself, but obviously if we're following our trade guidelines, that we want to make sure that we are getting a high probability trade. So really, it was kind of a difficult day for that in the beginning. Okay, I probably, as trades exit value area, you could have certainly placed a sell, and I have a red line here, right? And look at it, that's 2610. So that is right at the bottom of value area. So that would have been a good sell opportunity. Okay. So, and when they exit, so when trades exit value area, whether it's to the upside or to the downside, you are now thinking, okay, if the trade is going my way, okay, you shouldn't be thinking, oh, I'm going to ride this expiration, or just sit there and hope that it expires. Well, if you got in the trade here, say on this big candle down, you were convinced that this would have been a good trade. So that is roughly 10.15. So that's a lot of leg left if you're doing a daily strike, right? That's a lot of time left. So the mindset should be where is a good take profit target. So if you're doing a trade as the market leaves value area, whether it's up or down, you should be looking at the deviation levels for take profit targets. Okay. And the reason being is because you would have been, say you sold this 610 here. Let me clean up my drawings a little bit. So if you sold this 610 here, and yeah, it came up and tested. Now this is where you have to have patience, right? We don't need to hedge if it hasn't violated our strike. So there's no reason to get crazy here, okay? So, and then obviously it went back down and it just plummeted all the way down to the -1, okay? So at this point, you're probably at 95% profit potential. So you're probably leaving $5, you're waiting for that extra $5 per contract that comes only at expiration. That's a great opportunity to just take that profit, right? Because you don't know, this is still early. This is at noon, okay? So it hit the intraday low at noon, or almost at noon. So plenty of time left. So we don't want to sit here and hang on to a trade, even though, at 457 or 450 to 610, that's a pretty big margin of safety, but you just don't know, especially off of big moves like that. I've seen 100% retracement, and we almost got that today. So it's very important that you look at deviation levels for take profit targets, okay? Because that's just money in the bank ready to be taken. Okay, so now let's talk about kind of some additional opportunities that presented themselves. So this candle here, we broke, the wick pierced the -1 deviation level. Remember, we have a 68% chance of the market closing inside a 1 standard deviation move. So either the -1 or the +1, which you can't see on here. So pretty good odds. So, and then let's look at our conditions. Okay. Oversold, the momentum oscillator, all right, the Fisher transformer. You're way outside of the Keltner band. Okay. So we have all these things starting to stack up in our favor. But we want to make sure that the trend is reversing. So we don't want to get into a trend reversal trade if we haven't met our criteria. So we got this big down move. So we want to make sure that it breaks this trend. So we draw our counter trend line, and then we're waiting for a bullish candle to close in buy territory. So buy territory would be, so here is sell territory on this side of the white line, and here is buy territory. So we want a green candle. So here's the green candle that closed in buy territory. So that would have been a good entry point. So now you get a couple options here. Okay, you saw this thing starting to slow down. You could have took a real high probability trade, even though it would have cost you a little more, and taken this 450, which is outside of the -1. So it's a good shield. So you probably could have got this, 37, 40. Still pretty good profit. Okay, but let's say you wanted to confirm everything and be a good girl or boy. So you waited on this candle. You waited for price to come out of the oversold region. You wanted to wait for momentum to start shifting by this line going upward. And then obviously with our Fisher transformer, you're seeing some upward movement. And then you see it going back into the Keltner band. So we have all these check boxes, remember from our training, got all these checks. Okay, so this right here, this 470, which you probably could have got again at 40, maybe 45 on a buy. So now, okay, let's say if you get in these trades, then you're looking at possibly, you're seeing if it stalls at the minus 0.5 deviation level. Okay, so you're going to see what type of behavior it has at this level, and you can see for so here's 1 o'clock. So for about 2 hours, it consolidated. Okay, but we don't, you know, it came down, and this is a different strike here. But as this starts to leave and break, let me clear the drawings here so I can start fresh. As this starts to break and we get a green candle above our minus 0.5, that would have also been a good entry. You could have gotten into this 510 right here. Okay, remember, we're not looking to go to expiration on every single trade. We're looking to get some money and get out. Okay, so if we got in here, what would be the most logical take profit target? It would have been value area low or set, and they're basically in the same range. So as this stalled out up here, that would have been your take profit target. And then you're done for the day. Obviously, it just puttered out for the rest of the day. So when you get into a trade, remember you have hedging strategies to protect you. So if you did sell here in the morning, then you're basically waiting for price to pierce through your strike and get to the next daily strike to start hedging. Did it do it here? No. So really, that's all you really need to concern yourself with. Now, the only trade I probably would have hung on to is if I got into this 450. I would have waited, and if it got above minus 5 or minus 0.5, that would have been, I would have been waiting for this thing to test minus 0.5 again. It never did. But those are signs that you want to look for when you are making your trades every day. Now, we don't get this type of volatility every single day, but we get a fair amount. So I just want to make sure that we're all clear and that you could see now I'm showing you this in hindsight. Now I got in, unfortunately I was pretty well busy today, but I did end up getting in, when was it? I got in for this small little move. I was going to get in at the -1 at this either 450 or 470, and then I had to dive into a meeting. But I got in for just a real quick scalp trade. I think it was this little guy right here. So I got in, I sold right above this green candle and took profit at the bottom of this red one. Made several $100s just off a quick 15 minutes, 20 minutes. And there are so many opportunities like that throughout the day. Just boom, boom. So if you can get in the mindset of, looking at structure. Okay, so you see, when I say looking at structure, let's look at an example of what I mean. So you have, when it made this low here, okay, it created a structure level. Actually, where the price line is right now, this light blue line, that's actually the structure line. So if I was able to look at the markets all day today, I would have said, okay, I'm waiting for it to break this level. So it went up, it didn't break set, and it started coming back down. So then I'm waiting for it to break this structure level from the previous low. Not the wick, I'm looking at the bodies. It pierced right through that. That would have been a good sell opportunity. Okay? And again, you sell if it is violently going through deviation levels, then you wait. But as it starts puttering out here, then you take your profit. Okay? So there were plenty of opportunities today. Don't get so caught up with the open. Okay? It's real easy to get caught up and lose money. All right? Give the market a chance to validate your bias. Okay, this up and down nonsense, give it about a half an hour, unless it violently leaves value area. Those should be some quick signs that this thing's starting to move. But even at that, it could be a fake out. So if you get faked out, and even the best of us do, you have to be prepared to have a plan in place, such as hedging, etc., to combat that. So I hope this helps, guys. So again, you're looking for, as price moves, you're looking for structure levels, not just lines that we plot out on our chart, but structure levels that are created from the market. So you could see it tried to test this level several times. It pierced through it. Don't get lost in the candle wicks. Okay? It tested this level several times, came back up, came back down, and just sliced right through it. So that would have been a good opportunity. Okay? Now look at all the volume here. Look at all the volume here. Okay? And then when it got above it, what happened? Bounced right off it, bounced right off it, and went up. Okay? So see, when structure is created by the market, those are things you have to look for. Okay? All those touches. Okay? So if you have any questions about this or about support and resistance levels, how to find them, I'm planning to do a webinar soon just on support and resistance, because they do play an integral part of trading. Being able to identify those levels as they are written is very, very important. So I hope this helps, guys. Feel free to hit me up in the chat or post some questions on the page. And looking forward to talking to you real soon. Take care.